Hi everyone, it's Benny the Finance Dog, and welcome to my channel. We'll be going over my trade from today, but today's video is also about supply and demand zones. Let's get started. Supply and demand zones are areas on a chart where buyers and sellers are likely to come into balance. These zones can be used to identify potential trading opportunities and to manage risk. Supply zones are areas where there is an excess of sellers. This can happen when there is bad news about the company or the market, or when there is a lot of selling pressure from investors who are looking to exit their positions. When the price reaches a supply zone, it is likely to encounter resistance and could reverse course. Demand zones are areas where there is an excess of buyers. This can happen when there is good news about the company or the market, or when there is a lot of buying pressure from investors who are looking to enter their positions. When the price reaches a demand zone, it is likely to encounter support and could continue to move higher. This is why I like Apple as my day trading stock, because it is a good example of a stock that can be traded using supply and demand zones. Here's a chart that shows the price of Apple on the monthly chart that we went over yesterday in Sunday's market review video. I have marked out the supply and demand zones as they are illustrated on this particular chart. As you can see, Apple's stock price has bounced off these zones. This suggests that there is a lot of either selling or buying pressure at these zones and cause a reversal in the stock price of Apple. Supply and demand zones can be a valuable tool for day traders and swing traders. By identifying these zones, traders can identify potential trading opportunities and manage their risk. Again, risk has to be managed, as there's no guarantee the price will reverse at these particular zones, though they can be very useful. Now let's go over the charts to review today's trade. As always, we start with the daily chart. As we can see, yesterday, following the Worldwide Developer Conference, Apple had a massive move to the downside in a sort of buy the rumor, sell the news type move, rejecting a new all-time high and making a very large red candle as we went into today. I had a downside bias because of this. Moving over to the 4-hour and 1-hour charts, it was confirmed that the move was to the downside, as we had continued to move down over in the after hours and pre-market hours. Seemed to find a floor around that 177.75 level in both the 4-hour and 1-hour. Seeing that at open, the downside move continued as sellers were in control almost immediately. I waited for a pullback to occur before entering. I bought the June 9th expiration 177.50 puts for $134 per contract. I bought one contract at 638, which pretty much immediately moved in a positive direction. It did have a small drawdown, but I was able to maintain my stop loss and chase it up as the contract moved in my favor. These contracts did peak much later after I had already gotten out, but I had chased the contract price with my stop loss and exited at $1.64 or $164 per contract at 644. Overall, I was happy with my trade because I was able to use supply and demand zones to understand how far exactly this move would move and chase the gains with my stop loss, knowing that a reversal was soon to be had. I hope this helps you in your own trading and understanding the importance of drawing supply and demand zones, as that 177.75 level was respected and the price of Apple reversed after bouncing off that floor or demand zone. Tomorrow we'll be going over how exactly to draw supply and demand zones for your own various charts, as well as going over another trade, win or loss. Thank you for watching. Make sure you subscribe and like for more content.